Look around the global entertainment stage right now. You'll notice something pretty amazing. African culture is quite literally the heartbeat of it all. But there is a massive gap between creating that incredible value and actually capturing the wealth from it. African creativity is everywhere, but the money? It's just not staying with the creators. So, welcome to this explainer. Today, we're going to completely break down the exact structural blueprint that African creatives and investors can use right now to stop losing ownership and start building real, impenetrable generational wealth. We're turning raw talent into a well-oiled institution.
Okay, here is our roadmap for today. We'll start with the value capture problem. Then we'll get into building the IP fortress, followed by funding and generating revenue. After that, we'll hit scaling the creative empire, navigating the ecosystem risks, and finally, we'll wrap up with the generational wealth endgame. Let's jump right in.
Section 1. The value capture problem, or basically why African creatives are losing money. We really have to start by confronting the harsh reality of the market right now.
Africa has explosive cultural export potential, right? But the problem is this tension between high-value creation and poor value capture. Let me break this down into super simple terms. Think about a talented African animator who creates a globally viral digital series featuring beautifully drawn, incredibly authentic black skin characters. Now, why is that so insanely valuable? Well, it's because the global market is absolutely starving for nuanced, genuine representation. That unique art, those specific stories, that pure cultural authenticity, it's like a rare puzzle piece that these massive global streaming platforms desperately need to complete their libraries. That is high-value creation. But here's the kicker. Because of informal handshake deal structures and weak local enforcement, that same brilliant animator often ends up giving away the total rights to their work for a tiny fraction of its worth. We are literally creating the gold, but handing over the keys to the mine.
So how exactly are creators losing out on this wealth? Mostly, it's by selling their intellectual property, their IP, way too early or just too cheaply to get a project off the ground. It's kind of like selling the goose that lays the golden eggs just because you want a quick meal today. Many creators lack an understanding of complex licensing deals, so they surrender their outright ownership to foreign labels or agencies. Operating without a structured system to hold your IP simply means you are trading a lifelong compounding legacy for a quick one-time paycheck.
Moving right along to Section 2, Building the IP Fortress. This is the multi-layer blueprint, where we stop being just creatives and start becoming true institutions.
Before we build our fortress, we have to lay down the foundation. And that foundation is IP licensing. What does that mean? It means turning your creative works into long-term income-generating assets. Instead of a one-time outright sale, where you hand over your creation and literally never see another dime, you use royalty-based contracts. I want you to think of it like real estate. Instead of selling your house, you're renting it out. You maintain absolute 100% ownership of your art, your characters, your music, but you charge commercial users and streaming platforms a fee to live in it, and that pays you again and again and again.
And it's actually fascinating how simple this legal structure becomes when you keep that real estate analogy in mind. To protect your IP, you need 3 specific layers. Step 1 is your holdco, or holding company. Think of this as your impenetrable basement vault. It doesn't do any daily business. It literally just sits there safely holding all your IP assets. Step 2 is your opco, or operating company. This is your storefront window. It handles the day-to-day hustle, the deals, the partnerships, but, and this is absolutely crucial, it doesn't actually own the IP. That protects your core assets from any daily business liabilities. And finally, step 3, your SPVs, or special purpose vehicles. Imagine these as individual rented rooms for specific projects. So if you're funding one specific movie or one album, you create an SPV just for that. That way, if one project completely fails, it doesn't burn down your entire fortress.
All right, Section 3, funding and generating revenue. Let's talk about capitalizing this empire we're building. Because, a fortress without supplies isn't going to last very long. We need to fund it. Now look at this breakdown. We aren't building expensive factories, so we just need medium capital funding for legal structuring and early operations before that sweet licensing revenue kicks in. There is serious money out there eager to back structured African creativity right now. We're talking diaspora capital looking for cultural exposure, angel investors, family offices, and strategic media investors. They are actively looking for this.
I absolutely love this next concept. Asset light, but IP heavy. This is the real beauty of the creative economy. You don't need millions of dollars tied up in heavy manufacturing equipment or warehouses. Your immense value sits entirely in your legal contracts and your copyrights. And because of that, once your IP is created, your profit margins are phenomenally high,
since your only real overhead is just administrative and legal. So how does that IP generate massive cash flow? Well, you're building a recurring revenue engine. We are way beyond one-off paychecks here. You collect licensing fees. You earn ongoing royalty percentages every single time a song is played or a show is streamed. You leverage that IP for highly lucrative brand partnerships and syndication deals across different networks. Eventually, you can even use your proven IP as literal collateral for financing. It's a financial engine that essentially runs on its own momentum.
Moving to Section 4, scaling the creative empire. Once the revenue's flowing, it's time to grow the portfolio and cross borders.
Now, there is a world of difference between local competition and global competition. The old way relies on traditional local talent agencies and record labels, which, let's be honest, often take advantage of artists. But when you build an IP holding structure, you completely elevate your game. You bypass the local noise and start competing with or even partnering with global publishing companies, global IP funds, and royalty exchanges. You instantly stand out because you offer deeply structured African ownership, which is exactly what the global platforms want.
And as you scale up and add new IP assets to your portfolio, you trigger these really powerful network effects. More creators attract more commercial buyers. More buyers mean even more top-tier creators want to join your ecosystem. Plus, regional expansion into places like Ghana, South Africa, and Kenya is getting much easier by leveraging the African Continental Free Trade Area, or the AfCFTA. You're building an incredibly stable Pan-African portfolio.
Section 5, navigating the ecosystem risks. Because let's be real, hope is not a business strategy, so we need to protect the vault. Building an empire in emerging markets definitely has its hurdles. But for every single risk, we have a clear structural solution. Worried about IP theft? The solution is global copyright registration and active monitoring. Fretting over currency volatility like the Naira? Actually, scratch that worry, because the move there is foreign incorporation for your holdco, maybe in Mauritius or the UK, giving you total currency flexibility. What about contract disputes? That's exactly why we use clear shareholder agreements and those SPVs we discussed. And to stop mismanagement of funds, you put in place royalty waterfalls, which is just a fancy way of saying you have a strict automated rulebook for exactly who gets paid first, second, and third.
Part of mitigating all that risk is making the regulators your best friends. You've got to master bodies like the Corporate Affairs Commission for your registration, the Nigerian Copyright Commission to lock down your rights tight, the FIRS for taxes, and potentially the SEC. Staying relentlessly compliant with these bodies is your ultimate shield against sudden policy shifts.
And finally, Section 6, the generational wealth endgame. Let's look at the ultimate destination of this entire blueprint. When you structure your IP correctly, you aren't just hustling from gig to gig. You're building an institution with incredible strategic exit potential. You're positioning yourself to get acquired by global media conglomerates. Once your revenue is stable, you become a prime target for a massive private equity buyout. Or, hey, maybe you don't even want to sell. You can just sit back on a long-term dividend model where the compounding cash flow pays you and your kids and their kids for decades to come.
We've covered a ton of ground today, haven't we? But knowing the blueprint is just step 1. Executing it is step 2. Listen, the world is practically begging for authentic African culture right now, especially those beautiful, richly nuanced, and authentic black-skinned characters and stories we discussed earlier. The demand is astronomical, but to capture that staggering wealth, you need the right architecture. So, are you going to keep renting out your immense talent for pennies? Are you ready to stop losing ownership and build an empire that pays your grandchildren? The blueprint is literally right here. If you are eager to dive deeper and apply this exact framework to your own art or investment portfolio, please reach out to us today. Let's secure your vault. Thank you so much for joining me on this explainer, and I absolutely cannot wait to see the empires you all build.